Welcome, welcome, welcome. You're listening to the 20 and 98.1 FM. We're now almost 8.5 years into this show, and we've been doing it every Thursday, 1 p.m. And each week, we try to help a business owner learn something, either A, how to scale, how a company went from A to Z, or something marketing, or how to handle some transaction that they have a problem with. That's what we do each and every week. The show is Ask Brien, AskBrien. And for that, my co-host this week, Tracy, is going to try. We have an E, Brien, and why Brian or Bryan, but why it's spelled Brien, because she keeps on telling me, Peter, I'm not Irish. I'm not from Ireland. Why is Brian spelled that way, Peter? You're not from Ireland. And my name isn't Patty. Patty O'Brien.
No, say is how many times can you work the word pub into a sentence?
Well, that's why I said.
Yes, you're exceptional at that, I might add. No, of course.
And I'm always drinking.
Look,
Jen knows I always have a drink with me.
We want that tea, Long Island iced tea, maybe.
Well, I'm from Long Island, and it is a nice tea. So if a Long Islander is drinking, it's a Long Island.
You're like Blake knows that in Blake Shelton's Cup on the Voice, it's always vodka. So I'm pretty sure that we figured your situation out. That's not why we're here. We're not here
for that.
Recovery process.
What do you mean? I thought that was the whole purpose of the show.
No, the whole purpose of the show starts with our engineer.
Hi, how are you? Nice to hear your voice again.
No
you
applause?
too, and we are so glad that we're all, because one of the biggest factors and most important things about the Ask Brien radio show, other than our reception engineer, is our experts. And we have a repeat expert with us today, which is very timely because we are going to talk about the state of the financial economics world today, which is going to be, spoiler alert. But before we get there, what really defines an expert? So an expert, of course, is someone who has worked in their industry or field for a minimum of 10,000 hours. And if you do the math on that, which is that usually is on around 40 hours a week for 5 consecutive years. But anyone who has been in the startup world or works in the startup is absolutely not reasonable. That in the startup, it's probably more like 80 hours a week. So you can cut that. We're guessing.
It takes me 20 years.
Today has well over 10,000 specific industry. So what that also will be helpful for is education. So we are all about educating entrepreneurs. Very, very important because we can help you shortcut that learning curve and get you all up and running with a lot less friction and a smoother experience. That was a new E I threw in there if you didn't notice, Peter. And I'm sure that your enthusiasm is just contagious, right?
No, I'm very excited! Woo, woo!
Oh, wow, you spun out quickly on that one.
Yeah.
There's a reason.
None of us have eardrums left after that, so we should just wrap it up right now.
Isn't that an E? Eardrums?
Yes, it is. Yes, it is. Okay, and we see, but you never do, so we'll probably just work on
that must be related to the small, minuscule ego.
Yes. I usually hestate to bring up ego because you barely can fit it in the studio as it is. So, oh well.
Well, that's why behind Jen, she has this really big window, so we can just break it out. So my head.
So
I see where you're going with that.
You and your air quote Long Island iced tea can function in the studio and still have space for Jen and the board.
Well, and don't forget, you need to have a lot of energy.
Mm-hmm.
Another E, right?
Yes,
Energy.
you do.
Like
Stop
Energizer.
mixing the Red Bull
Battery.
with the tea, if you don't mind. So, all right. Well, listen, we do have such an amazing guest today, and so much important stuff about this. I'm going to turn it back over to go from there.
Well, even though you've been on the show before, not everyone has listened to the episode that you were on. And for those, hey, for people that didn't listen to the show.
Well, I mean, I've used it once. You're there you go.
For those, that's for the audience out there that hasn't listened to our show.
It's not a happy sound, though.
That is awful.
Yeah.
Awful.
It sounds like when I go to the bathroom.
We went.
All right.
Oh, geez.
Know that?
I don't have another negative
Lord.
sound effect on that one.
She's working on it. She'll find something
Can we
soon.
get this train back on the track, please?
Please, Tracy, take
So
it. You know
anyway-
what? I'm going to pot his mic down. You're up, Trace.
For those people who have not listened to you before, why don't you give a little background?
Oh, thank you. My name's Mark Ritter, and I'm the CEO of a company called Member Business Financial. So it's quite the mouthful, so we just call it MBFS. And we are a little different in that our company we're owned by credit unions for credit unions and small businesses all across the United States, I'm proud to say. And we help them and really driving their process through to get the financing they need from the credit union community. And one of the things to think about credit unions, we're cooperatives. We work together. Credit unions like to help each other out. They like to help their community out. There's 4,600 credit unions out there today in their community. And instead of every credit union going out and hiring somebody like me, hiring a team of lenders, building all the software and infrastructure and people needed to help small businesses, they have formed companies like us so they could do it much more efficient and effectively. And we do a lot of small business lending. We do a lot of government guaranteed programs. And then we also do a lot of investment real estate lending for, maybe you're it out and you bought a property or two, up to pretty substantial real estate sizes. So,
And how?
I have been in the credit union space for 25 years. And it makes me sort of cringe when I say 25 years now. And I've been the CEO of MBFS for 13 years.
Now, is this by you or owned by credit unions?
We are owned. I am the CEO of the company, and we are owned by our 13 credit unions, and we work with over about 120 credit unions to get their small businesses in the community the financing they need.
So what's the bank?
So that's a question that if you asked my wife and kids, they probably couldn't even answer, and they live around me all. So, when you drive past your local credit union, they usually have a drive-through, an ATM. They have a sign up that says, "Come in and get a loan from us." And I hate to say it, but for kind of the day-to-day products, a dollar is a dollar. So there's only so much we can do. But really what the difference is personally, I like to think the service is much better. I think people, when they have that credit union membership, they feel a little bit closer to it, the high level of service that maybe you don't get from the big banks. But it's also and run by a board of directors that is democratically elected by the membership. So as opposed to, there's not the stockholders of the credit union, the credit union just to make a bigger credit union and a bigger buck. It's really just a not-for-profit cooperative businesses.
So one more question, and we're going to go really deep dive here. But you're own 13 credit unions, but you work with many credit unions, even ones that don't own you. And so what if I mean, do you have it spaced out so that you're not going to have be representing clients that are competitive with each other, or how does it work?
If I was a commercial bank, that would be a nightmare. Credit unions are very friendly with one another. And one of the keys that we do is fund loans among the credit union network. So, you may get a loan from, your credit union on Main Street. It says, Main Street Credit Union is your lender, but behind the scenes, we're funding these loans group of credit unions. So that really minimizes the competitive aspect of it because people share with one another and they share the funding of it. So, even though somebody might, get the loan in their name and somebody doesn't, we actually find that in the credit union space, people, the different institutions will work together. So it an issue. You would think it would be a big issue, but with the nature of who we work with and who we're owned, they're all with one another.
So if I'm a small business owner and I want to borrow money, okay, I can go to my bank, or I can go to I'm always getting emails or spam. Hey, $100,000. You can get it tomorrow, like whatever. I presume that's high interest rates, whatever. So
yeah.
On the credit union, it's very similar to the bank, right? You just go into the only difference would be maybe the terms or maybe the friendliness of the staff, but it's bank loan or credit union loan, or is there a difference?
Yeah, I would describe our lending capabilities and network and the products that we're offering to similar to maybe a smaller regional bank or a community bank. We're not we're not doing massive skyscrapers in downtown Los Angeles. Maybe some of the large-scale corporate lending to public companies. We're lending to America and the people who invest in the real estate behind it.
So if I had a startup, right, I'm just starting my business, and I do a business plan. It looks like, the first year and a half, I'm probably going to be negative $160,000, but then I should become, very profitable, and eventually by year 6 or 7, I'll be a cash cow. So I decide I want to borrow $150,000 so that I can focus on the business. Is that something that you guys can do, or that's not within your range?
Yeah, absolutely. Look at businesses in all ranges. And one of the, 150 some thousand or 150 some million people belong to credit unions. So where's one of the easiest places to get your financing from? Where they know you. So that's a plus in the box. But we're very active for kind of a new unproven business. We'll look at you holistically, but we also are very active in the SBA program to structure that so you can a marketplace today. There, some people look at it and say, "Oh, I'm getting it through the government." The terms, it's really a great deal. Yeah, like when you look at the terms of the loan that they can offer you relative to your business.
So on an SBA loan, is what's the difference between getting an SBA loan and a regular loan in terms of, obviously, there's a lot of paperwork. I understand that. But in terms of ability to get those type of loans, is it easier to get that type of loan because the government is guaranteeing it? Or is it just as hard whether or not you were loan? Area?
If you come to me with a lousy loan request, the worst thing that I can do is just say, oh, I can make it an SBA loan. We really have to look and say, is this a reasonable likelihood of success, a reasonable likelihood paying it back? Which is a different philosophy than the spam emails you get where, 30% and to me, those businesses are just a death spiral for the small business community. You might as well get your money from the mob. And at least, they try to keep your business alive. But these predatory small businesses are they're unregulated and they crack down. But, under the small business loans, what you find loans for working capital type of needs and the soft costs that you need to help in that overhead while you business and get the cash flow positive.
So what are soft costs?
Besides soft
pillows.
costs?
Besides pillows.
Oh, sorry, you cut out there for just 1 second.
I said besides pillows, what's the soft cost?
Really, when you up that, you're leasing a spot. All of those leasehold improvements you need, the signs, engineers, and getting the permits. Those are the types of things that, unfortunately, they don't, but they're needed to get your business up and running. And many entrepreneurs underestimate, the attorney to get up and running and to get your accountant up and running and all of the entity formation and working on the marketing side to get those up and running. And that initial inventory purchase that maybe you need to get the to get those moving and the cash flow coming in. So
soft means basically startup costs. What is it?
Not your pay. When we say soft costs, things that aren't your everyday pay. Your payroll and your utilities and the kind of what things you think about when you're starting up your business.
So in accounting terms, we use the word extraordinary, right, versus regular normal. So that's a word I've seen used. More like one-time things, right? You could improve your. You get up and running, you get all the stuff going. It's going to last you a certain time frame before you need to do an upgrade, right? So that's what you're.
You tell people they need an environmental survey for their business. The first thing they say is, "Why do I need that, and what it does?" And the answer is, "Well, because somebody in the government wants, the local county needs it done to make sure your business is safe." But it's something nobody wants to do, but a lot of people need to get it done.
So we only have about another 50 seconds before we're going to be taking a quick break. Besides loans, what else can the credit union do to help the small business?
We run a wide variety of services, from depository services, payment services, to help you move your money around, manage the money. Virtually every credit union has great retirement for once you get up a little bit more established. And overall, who doesn't consumer from the credit union? So I really like to think of us as a one-stop shop for the small business owner.
Well, thank you very much. We're going to take it's Brien Radio Show on KHS 1220 and 98.1 FM. We'll be right back. Welcome back. You're listening to the Ask Brien Radio Show on KHS 1220 and 98.1 FM. Like no other station in the world. That's right. We are like no other station in the world. Hometown station.
Hometown with Peter.
Well, hometown, hey, home big banks and got hometown credit union. All right. Tracy, my co-host, had some questions for you, Mark.
Yes, well, talking about this during the break, but I think it's important for everybody to have a good, clear understanding of exactly what are the requirements and what are the easiest ways for to join a credit union.
Sure. And this has changed a lot over the years. When there was almost 10,000 credit unions in the country, many of them were, you had to work at a specific, you had to be a teacher at a local school district, you were a government employee, they were military based. And today, I say for anybody who drives past a credit union, there's probably a 95 to 98% chance you could go in and open an account and just ask them how to open an account. Most of credit unions are either community-based, where maybe the area that you live in that you're driving past, or they have different organizations that are fairly wide open that you could go in and join for a couple dollars and open it out. Probably the one credit union where I would say that doesn't exist is the largest in the country. They still have a relatively tight field of membership, even though they're a $160 billion institution, where you have to have a direct military affiliation to join them. But they're almost more the outlier. And, anybody who's driving past, stop in, talk to them if you're ever curious, and I'm going to bet you can open an account up right away.
I love that. And I think you're right. I think it's less mysterious than it used to be. I think there was a lot of mystique around it before. And now it's much more, I think you hear a lot more about people personally banking with credit unions, other large banking institutions like Wells Fargo and things like that, because they do have such a personal approach, and they have empathy. We don't always hear about in the banking and finance world, right?
What did you say?
I always say if I went to work for a bank, they'd probably fire. Be a little more relaxed from working in the credit union and conversational, and let's see how we could get it done, and work for a win-win. So sometimes, particularly for the big banks, that's not necessarily the culture. So
no, not in the least. So as a small business owner myself, I would love to talk through the whole strategy around when you're in a growth phase. Maybe it's like, let me reframe that. When you're in a startup phase and then when you're in a growth phase, because they're definitely two different objectives. But when do you know whether or not you should get a loan or whether or not you should establish a line of credit?
Sure. Good question, and we get it a lot, and we see people make some very similar mistakes a lot. And a line of credit is it's replacing future cash that's coming in. Yeah, I buy a bunch of records for inventory, and then eventually people come in, buy the records, ourselves by my record shop analogy.
Oh, I don't know. Records are back in style.
Yes.
I even saw an article earlier in cassette tapes again. I'm like, what?
Yes.
So yes, you might have to open a vintage cassette store.
I'm looking at my record collection, so that's why I said that. So people buy your records, and then what you want to do is take that cash and maybe you're a construction company or an accountant or attorney where you're providing services out. Eventually you get paid to come back. So you can take care of all your costs now and then should be a revolving fund based off of the line of credit. Well, For a growing business, you make that sale, and then what happens is you have more sales. So you can't really money line of credit because you're constantly needing it, and every month it feels like you need a little bit more. And these are permanent working capital. How much money do you always have to float for your business? If your inventory at your record store is going to be $50,000, take that $50,000 and put it on a loan that you pay off over time, and then you have $50,000 of equity in your business. What do called, unfortunately, the evergreen line of credit, where you pull off of your line of credit and you're constantly in debt. But when you have that concept of what's the permanent working capital that I need, the flow business, that's a loan. Temporary needs are your line of credit. Putting because you're driving somewhere to make a sale that you'll get pay off your credit card, which is a line of credit at the end of the keep when you where it becomes that death spiral is where you don't have the cash flow coming in, and at some point you're just going to have to term it out and pay it off. So sometimes 9 out of 10 people say, I need a line of credit. But what they actually need is a loan that's paid down over time and a seasonal needs for the revolving needs and to help out with cash flow needs.
I think I just need a little bit more clarity about the 50,000 inventory and getting the 50,000 loan. Can you explain that just in terms of,
Yep.
Because wouldn't you always have to keep getting 50,000?
Well, if you're always going to have $50,000 tied up in your business, and we give you a $50,000 loan, eventually you'll pay. Think of it as a car loan. Eventually, pay that down to zero. Still have that $50,000 of cash in your business as equity instead of debt now.
Okay, so the records that you sell, you may be buying them for 50,000, but you're selling them for 100,000. So you're paying off the 50 and keeping.
You're buying new records, and you have that steady supply of inventory for your business.
Okay, great. Now a break for our sponsor.
Whoa. You listen to the Ask Brien radio show on KHS 1220 and 98.1 FM. And no word from our sponsor.
And we want to say thank you to Legal Steps. It's stepz.com. That's with a Z. And Legal Steps is pretty great if you're looking to finally take that big step. You've been thinking for months, maybe years, that, you know what, I got a really good idea. I have a really great product, and I want to put it out there. Like, I have no idea even where to begin. The folks over at legalsteps.com can help you do that. They offer you can register a trademark course, form an LLC, or form an S corporation. And of those three, you kind of just take it at your own pace, which is huge, especially with everybody's schedule these days. No one has time to worry about someone else's schedule, that you have to log into this class, practice, or I have to make dinner, or the dog's barking. You work at your own pace, no one else's. You can pause it, rewind it. You can see what your expert is looking at, so you know that you're answering the right questions, because I don't know about you, sometimes these legalese questions can be a little confusing. And so you know that you're answering everything the right way. There is no confusion, no worry that you're doing it incorrectly. You are following along. What did he just say? What am I looking at? Go back, take notes. It's could not be easier. The courses and the attorneys already review attorneys who have over 30 years experience. So you know that you're in good hands. You're not just working with some, Yahoo online. And the courses are affordable, finally. They're all under $150. So you cannot let something like $150 get in the way. To legalsteps.com, legalstepz.com.
Thank you, Jen.
You're
and
welcome.
Thank you to Legal Steps.
Yes.
And thank you to Mr. Yahoo.
The Yahoo. I wonder who that is.
Woohoo! All right. Again.
Jen always likes to make an appearance.
Anyway, listen to the Ask Brien radio show on KHS 1220 and 98.1 FM. Now you can go, Tracy.
Okay, so much happening.
You're enthusiastic.
Okay, so what?
You're very enthusiastic.
Yeah. So, okay, I want to dig into this a little bit deeper because I think it's something that people don't really fully understand a lot of. So inventory is super clear to me. You've got 50 grand in record inventory. You sell it for 100. You keep. What are some things that, like, for example, if you're in the growth phase, so you've already been, maybe you're a service-based business, you're up and going, and you want to add a new revenue stream, you want to add a key hire, would that be something that you would tap into more, or would it be something that you would take out a loan for? I'm trying to get some different examples of, like, where do you take the right or the left?
Sure. Let's say you're a delivery business. Well, you need two things. You need a delivery driver, trained, and there's some dead time there, and you need a truck. Now, you're going to have that new startup employee. It takes them a while to get up and running. That piece, sometimes you can do it as a loan. We all agree if you're going to buy a new truck, you don't put a truck on your line of credit. You just buy the truck, pay it off over time. And your people, many times, if you're a blue-collar worker, you people a lot of down trees at my house, and we had to hire a tree company to come and cut them. They hire 3. They're going to pay these people immediately. Well, they might not get paid for 30 to 45 days. That's because they have these upfront people expenses who expect to get paid, and they're going to be getting cash 45. And then when they get that cash, then they can revolve it back and pay off the line of credit. The mistakes that we hear over and over and over is typically, that business owner, everybody thinks of the cash cow of big business. I signed a government contract. I signed with a big box retailer. Typically the better your clients, the higher quality your clients, the worse they pay. They could tie up your money for 90 days. And you go out of business with record sales because you're not getting paid. So that's where it's important to be properly use it.
So I totally agree with you, and I think so much of it is discipline too, right? So that
Absolutely.
When you do ultimately get that payment in 90 days, you don't then wipe out the line of credit. I think that's a major thing that people have to, and that does require some discipline, especially if you're, looking at other areas that you want to expand in. It's right there in your account, and then it's kind of easy to say, well, I'm going to pay it off next month, right?
Yes. And a lot of entrepreneurs aren't prepared for that step back. Sometimes you have to make a nice job and you have a steady income. Every 2 weeks you're getting paid. You have benefits. But as that new business owner, sometimes you could make more money, working at the local convenience store until you get things established. And that's a tough pill to swallow. And sometimes, depending on your family situation, it's tough for your family to.
Yeah.
We're starting a new business, and it's going to be a little bit tighter now from when I had the nice job.
Well, and also people can make the mistake of not paying themselves because maybe they literally can't in that moment. Then what ends up happening is a budget line item for if they needed to replace themselves, because ultimately you don't want to be the business development person, the web designer, you have to wear hats, but you have to be able to allocate and be able to have at least some budget set aside that if you needed to replace yourself, that you have the money to pay that person.
Absolutely. And we'll also see, we regularly will see people when they're starting up a business sacrifice their personal credit to keep the business afloat when so much more. So when you go out and get trade credit, or you're buying a new house or a car, or so many loans, when you sacrifice your personal credit early on, you think I'm doing it for the business, but you're really hurting the business just as much.
You're listening to the Ask Brien radio show on KHS 1220 and 98.1 FM. Right back. Welcome back. You're listening to the Ask Brien radio show on KHS 1220 and 98.1 FM. Tracy?
Yes, well, I feel like this hour has just gone by incredibly too fast. I know that I would have even many more questions. So, Mark, what is the best way for people to get in touch with you, to learn more about going on and helping to navigate the state of the economy right now? What is the best way for people to continue this conversation with you?
Yeah, sure. I host a weekly podcast, Credit Union Conversations. It's a little bit of industry lingo, but we also talk a lot about in the world and the lending markets and the environment. Credit Union Conversations is on every major podcast network out there. And then .org, as in Mary Boy Frank Sam.org, you can connect with me, or markritter.com, MARKITTER.com.
Well, Peter, I know you have a couple of questions that you want to get into before we get out of this over.
Thank you very much, Trace. So we've talked on the show so far about loans, which everybody knows, and lines of credit, which I think people card concept. But an area that we hadn't discussed, and I was asking you earlier, is factoring. Why do I need to get a line of credit or my money, and that way I don't have to worry about anything? I'll just put up that $50,000 of records, knowing that I'm going to get the money back. I'll just use that money.
Factoring is an alternative, and it's a viable alternative for many situations. The one piece to consider, it is generally at a much higher rate, typical bank line of credit. So if you could qualify for a line of credit and get that and secure a line of credit, that is always typically going to be more favorable terms. Factoring your risk and use it properly for a growing business where you need to finance your growth. Factoring is a very viable alternative. Just go into it knowing it's more much higher rate.
Now, on a loan, that's usually going to be a set dollar. A line of credit will be a set dollar amount, but probably to me would be easier to change, and a factoring would be the easiest. So in terms of flexibility, hardest. So if I got a $500,000 line of credit, and I'm spending $500,000 a month on my office, employees, everything going on. So how long is so? do I just pick up the phone typically and say, listen, I need a $750,000 loan. Here's my tax returns, and get that done in like, a couple of weeks, or is that like, a regular loan process here that's going to take me a couple months?
And once you have that relationship established, somebody's best interest to properly finance your business. I have seen more loans go bad because a business is underfinanced than overfinanced. So it is the lender's best interest to make sure they are properly financing your business. And I'd rather give somebody a line of credit for a couple bucks more than they need than under what they need, because if they're missing payroll, they're not paying vendors, they're running tight, their service degrades. There's many other things that make me work properly fund your business.
And on that note, right now there's a big area. We had a whole last week on tariffs. And so right now, with tariffs, the cost of the goods may be going up, right? Those records that you were buying from China, so you're buying 50,000 records and cost you $50,000. But with a tariff, that's going to really, really increase things. And we don't know how long it's going to last and if it's going to be permanent and what the rates are going to be. So, how can a business owner adjust for that?
My biggest fear in tariffs is agriculture. And because that is the shortest and turnaround of any service. They pick blueberries in Chile, 7 to 10 days, they're sitting in your grocery. So I think the tariffs are going to go up, down, up, and they'll eventually stable out. Now, when you if you run a jewelry store, you may get inventory, and you're not going to sell that jewelry for years. The tariffs and defer a little bit and wait a bit, or you can buy ahead. But if you sell avocados and mango, you don't have to. So the people, I am most concerned about the ag industry and some of those people with very short turnaround times on their inventory. It is going to call. I think history is going to say we should have done a tax deal and a tariff deal altogether, but that's not the mindset of this administration. It's hurry up and wait and fix it down the road. So I think once a tax deal is done, you're going to see a life balance out, and it's going to be good for small business owners. But you are going to have people who are going to have to jump ahead, and some people who are going to have to defer and find some new supply channels. And that's not a short time period. What I always say is don't overreact to the news, react to the facts.
And on that note, we've got to take I wish we could continue the conversation. Listen to KHTS 1220 98.1 FM, the S. Brien Show. Over.